Hello everyone, this is Mark with Semantics Trading with your daily recap. So today we saw the US equities fall dramatically after Apple announced plans to restrict hiring, and this adds to market concerns that the Fed's anti-inflation drive may send the country into recession. The S&P 500 extended losses in the final hour of trade after posting a gain of over 1%. Tech and healthcare stocks led the decline, with Apple losing more than 2% on its worst day in over 3 weeks. According to people familiar with the situation, the iPhone maker intends to halt hiring and spending growth in several divisions next year in order to prepare for a future economic slump. The announcement came on the heels of a similar move by Google last week. It appears that a lot of tech firms are cutting jobs as a precaution for economic turbulence, and you could say they're sort of front-running the recession. Tomorrow, on Tuesday evening, Netflix will kick off their second quarter earnings for major technology and communication businesses, and the profit growth in that industry is projected to drop dramatically. Earlier, we saw Goldman Sachs post better than expected earnings, driving its stock up, although it did drop by 47% in profitability. So that is something to note. We've seen stocks recovering from their June lows on anticipation that the Fed was making progress on its attempts to curb price increases. We did see treasuries fall on Monday, with 10-year yields falling before 3%, still lower than the 2-year yield, and it still leaves the yield curve inverted, signaling that the market is pricing in a recession. We did have the prospective house buyers release today. It was released by the National Association of Home Builders, and this was a July survey. And what's very notable about this release is that every time that the traffic of prospective buyers index has dropped precipitously and stayed low, U.S. housing prices in real terms have struggled in the following quarters. And we do have the housing starts released tomorrow, and that's a year-over-year change in single-family housing. And it is expected that these numbers will be pretty bad as mortgage rates go up and the demand goes down for houses as affordability goes down. We also do see a bifurcation in central bank policy globally, which is not great because it causes financial imbalance, import inflation, distortion in exchange rates. You do have the second and third largest central banks being very dovish, and the largest being quite hawkish. Commodities are also priced in dollars, so if currencies like the British pound which is at current historical lows, is lagging the dollar, it creates massive problems as well. We do have the ECB rate decision this week, which is high risk, and the expected consensus is 25 basis points, as well as the Bank of Japan and CPI. And we do have Lagarde, the ECB president, doing a press conference on Thursday. So there is a lot of risk events that could occur. I would say that in this type of week, I would be very nimble and manage risk very well. But yeah, with that being said, that's it for today's report. It was a short one. And if you did like the video, be sure to subscribe and like the video, and check out a link in the description if you want to be part of the Discord. This is Mark signing out.